Imagine having a number so powerful that it could save you tens of thousands of dollars over your lifetime. A number that could help you qualify for the best credit cards, secure lower mortgage rates, get approved for loans more easily, and even improve your chances of renting the apartment you want. That number is your credit score. And today, we're talking about one of the most impressive financial milestones anyone can achieve: earning an 800-plus credit score. Now, when people hear 800 credit score, many assume it's something reserved for wealthy people, business owners, or financial experts. But that's not true at all. In fact, some people earning modest incomes have credit scores above 800, while some high-income earners struggle with poor credit. Why? Because your credit score isn't measuring how much money you have. It's measuring how responsibly you manage the money and credit available to you. By the end of this video, you'll understand exactly how credit scores work, the biggest mistakes that keep people stuck with average scores, and the fastest, legitimate ways to move closer to an elite 800-plus credit score. Let's begin with something most people never fully understand. Your credit score is not random. It's not a mystery. It's not determined by luck. It's based on a set of financial behaviors that credit bureaus and lenders track over time. Think of your credit score as a report card for how you handle borrowed money. Every time you use a credit card, pay a loan, miss a payment, or apply for new credit, you're sending signals to lenders. Those signals help determine whether you're considered a low-risk borrower or a high-risk borrower. And when lenders see low risk, they reward you with better opportunities. The first and most important factor affecting your credit score is your payment history. This single category carries the most weight. Simply put, lenders want to know whether you pay your bills on time. If you've ever lent money to someone, you know exactly why this matters. Would you rather lend money to someone who always pays back on time or someone who constantly misses deadlines? The answer is obvious. That's exactly how banks think. One late payment can significantly hurt your score. Several late payments can damage it even more. This is why people with excellent credit are often obsessed with paying every bill before the due date. Not most bills. Not almost every bill. Every bill. Many people believe they can occasionally miss payments and still maintain great credit. Unfortunately, the system doesn't work that way. Consistency matters. If you're serious about reaching an 800-plus score, automatic payments can become one of your greatest tools. Automation removes human error. You don't have to remember every due date because the system does it for you. The next factor that has a huge impact on your score is credit utilization. This is one of the fastest areas you can improve. Credit utilization simply refers to how much of your available credit you're using. Let's say your credit card limit is $10,000. If you're carrying a balance of $5,000, you're using 50% of your available credit. That utilization rate is considered high. Now imagine your balance is only $500. Your utilization would be 5%. That looks much better to lenders. People with the highest credit scores often keep their utilization below 10%. Some keep it below 5%. This is one reason many people experience rapid score increases after paying down credit card balances. When your utilization drops, lenders immediately see less risk. That's why one of the fastest ways to improve your score is reducing outstanding balances on revolving credit accounts. Many people spend years searching for complicated credit hacks while ignoring this simple principle. Paying down debt often produces better results than almost any shortcut you'll find online. Another factor lenders examine is the length of your credit history. This is where patience becomes important. Imagine two people. One has managed credit responsibly for 15 years. The other opened their first credit card 6 months ago. Even if both have perfect payment histories, the person with 15 years of experience appears more predictable. Lenders like predictability. That's why older accounts are valuable. Many people make a costly mistake when they pay off a credit card. They immediately close the account. They think they're simplifying their finances, but closing old accounts can sometimes reduce the average age of your credit history and increase your utilization ratio. In many cases, keeping older accounts open can be beneficial. Of course, every situation is different, but understanding the impact of account age is essential if your goal is an elite credit score. Let's talk about another mistake that quietly hurts millions of people: applying for too much credit in a short period. Every time you apply for a new credit card or loan, lenders may perform what's called a hard inquiry. One inquiry isn't usually a major problem, but multiple inquiries within a short period can signal financial stress. Imagine a bank sees someone applying for 6 credit cards, 2 personal loans, and a car loan within a few months. That behavior can raise concerns. People with excellent credit tend to be selective. They don't apply for every credit offer they see. They understand that each application should serve a purpose. Now, here's something many people don't realize. Your credit report can contain mistakes. Yes, mistakes. Errors happen more often than you might think. Incorrect balances, duplicate accounts, wrong payment histories, accounts that don't belong to you. All of these errors can negatively affect your score. That's why reviewing your credit reports regularly is one of the smartest habits you can develop. Imagine losing points simply because nobody noticed an error. Monitoring your credit isn't just about improving your score, it's also about protecting yourself. Let's shift our attention to the habits of people who consistently maintain scores above 800. When researchers and financial experts study consumers with elite credit scores, certain patterns appear again and again. These individuals don't treat credit like free money. They treat it like a financial tool. They use credit cards responsibly. They avoid carrying unnecessary balances. They pay bills consistently. They rarely miss due dates. They think long-term rather than short-term. One of the biggest differences between people with average credit and people with exceptional credit is discipline. People often assume there must be a secret strategy, some hidden formula, some exclusive trick that only financial insiders know. The truth is less exciting but much more powerful. The highest credit scores are usually built through small, consistent actions repeated over long periods of time. Think about it this way. If someone makes every payment on time for years, keeps utilization low, avoids excessive debt, and manages credit responsibly, the system naturally rewards them. Credit scoring models are designed to identify exactly that type of behavior. Now let's address one of the biggest myths in personal finance. Many people believe carrying a balance helps their credit score. This myth has been around for years, but it's simply not true. You do not need to carry debt from month to build excellent credit. What matters is demonstrating responsible use of credit. Paying your balances in full whenever possible can actually save you money while helping you maintain a healthier financial profile. Why pay interest if you don't have to? Remember, the goal isn't just a higher score. The goal is greater financial freedom. A strong credit score should help you build wealth, not create unnecessary debt. Another strategy that can help some people improve their utilization is requesting a credit limit increase. Imagine you have a balance of $1,000 and a credit limit of $2,000. You're using 50% of your available credit. Now, imagine your lender increases your limit to $10,000 while your balance remains the same. Your utilization immediately drops to 10%. That's one reason credit limit increases can sometimes support score improvement. Of course, this strategy only works if you avoid increasing your spending. More available credit should create flexibility, not temptation. At this point, you may be wondering how long it takes to reach an 800-plus score. The honest answer is that it depends. Everyone starts from a different place. Someone with a score in the high 700s may reach 800 relatively quickly. Someone rebuilding after missed payments may need more time. The key is understanding that excellent credit is a marathon, not a sprint. The people who succeed are usually the people who stay consistent. They don't panic when progress feels slow. They trust the process. They focus on behaviors rather than obsessing over daily score fluctuations. And eventually, the results follow. So if you remember nothing else from today's video, remember these 4 principles. Always pay on time. Keep your credit utilization low. Avoid unnecessary applications for new credit. And maintain your credit history for the long term. These simple habits have helped countless people move from average credit to excellent credit. An 800-plus credit score isn't about being lucky. It isn't about being rich. And it isn't about finding a secret loophole. It's about proving, month after month and year after year, that you're someone who manages credit responsibly. And when lenders see that level of consistency, they reward it. The sooner you start applying these principles, the sooner you'll begin moving toward the financial opportunities that come with elite credit. Your future self will thank you for every smart decision you make today. Subscribe to this channel. Like and share. I'll see you in my next video.